Welcome to Griffonomics.
Glad to be here for this one.
Yeah, today we are bringing you a custom-tailored deep dive into what I think is an absolute inflection point in the aerospace industry.
No, absolutely.
We're looking at Firefly Aerospace, so we've been pulling apart their Q3 and Q4 2025 financial reports, their SEC S1 filings from the recent IPO, and, a huge stack of market analyst notes.
There's a lot of material to go through.
Right. And our mission today is to unpack how this plucky small launch rocket builder is attempting a massive transformation. They want to be a vertically integrated end-to-end space and defense powerhouse.
And to really understand the stakes here for you, as an investor or just an industry watcher, you have to look past the launch pad.
Yeah, it's not just about rockets anymore.
Exactly. The modern space race is no longer just about launching metal tubes into orbit. It's about data, it's about national defense, and establishing actual lunar infrastructure.
Which is wild to even think about.
It is. Firefly is attempting this high-wire act that most legacy aerospace companies wouldn't dare try in a single decade, let alone a single year.
Right, because they are projecting what? A staggering 172% revenue growth for 2026?
Yeah, 172%. And that kind of scaling requires absolute operational perfection. So we're going to explore the mechanics of how they actually plan to pull that off.
But before we can understand where Firefly is going with data and defense, we need to understand how they actually build their tech, right?
Yeah, you have to look at the foundation.
Because you don't hit 172% growth by starting from scratch every single time you want to build a new vehicle. Okay, let's unpack this. Firefly's manufacturing strategy is basically what I like to call space Legos.
Space Legos, I like that.
Right. Because they use shared underlying technologies across their entire product line to, force economies of scale.
Yeah, Space Legos is actually a highly effective way to visualize their flywheel business model. They completely refuse to treat each rocket or spacecraft as a bespoke, isolated engineering project.
Which saves a ton of time.
Exactly. Instead, they share critical architecture across the board. So the best example of this is their carbon composite structures.
Right.
They don't build rocket bodies by hand. They use this proprietary automated fiber placement machine.
Which sounds incredibly sci-fi.
It basically is. Think of it as a massive, high-precision robotic loom. It rapidly weaves carbon fiber into these lightweight, incredibly strong rocket fuselages and propellant tanks.
Oh, wow.
And they take that exact same manufacturing process and apply it to every piece of hardware they make. It drastically reduces the time from raw material to finished vehicle.
And it isn't just the carbon fiber shells, right?
Right.
They share avionics, flight software, and most importantly, their patented tap-off cycle rocket engines.
Yeah, the engines are key.
They started with the smaller Reaver and Lightning engines, and now they've scaled that exact same underlying technology up to their massive new Miranda engine.
The tap-off cycle is really the mechanical secret sauce here. In a traditional rocket engine, you have these incredibly complex separate gas generators just to power the fuel pumps.
Which is just a nightmare of plumbing.
A total plumbing nightmare. Firefly's tap-off cycle eliminates that entire subsystem by bleeding hot combustion gases directly from the main combustion chamber to drive the pumps.
So fewer moving parts.
Right. Fewer moving parts, significantly lower weight, lower manufacturing costs, and, in theory, much higher reliability.
And because they perfected the physics of this cycle on smaller engines, scaling it up to the Miranda engine was unusually fast, right?
Extremely fast.
Oh.
They took Miranda from a clean sheet design to over 70 test fires in under 2 years.
That brings us to the actual hardware lineup built with these standardized parts. So you have the Alpha rocket, which is their operational 1,000-kilogram small lift vehicle.
Right.
You have the upcoming Eclipse rocket, which is a massive 16,000-kilogram medium lift vehicle they're developing with Northrop Grumman.
Yep.
And then on the spacecraft side, they have the Blue Ghost lunar lander and the Elytra satellite orbiter. But here's the catch with the whole Space Legos concept.
There's always a catch.
Building all this impressive hardware is essentially just a delivery mechanism for their real business model.
Yeah, and that brings us to the ultimate pivot. The financial reality for Firefly is that selling rockets is a brutal, low-margin business.
Super capital intensive.
Incredibly. The real margin, the revenue that actually pays the bills and justifies their valuation comes from their pivot to data as a service or DaaS and defense software contracts.
Hardware gets them into the theater of operations, but data is what they actually sell.
Exactly. Once that Blue Ghost lander touches down on the moon, or that Elytra satellite establishes orbit, the data they gather can be packaged and sold repeatedly to multiple clients.
whether that is lunar surface mapping, mineral detection, or, space domain awareness,
Right.
which perfectly explains the aggressive move they made that completely rewrote their corporate DNA. They executed a transformative $547 million acquisition of a company called SciTec.
Huge deal.
And at first glance, a rocket company buying a software company seems a bit disjointed, but it changes everything.
It does, because SciTec isn't just any software company. They're an established, highly respected provider of AI-enabled defense software and big data processing.
Okay, so what do they actually do?
They specialize in taking massive, chaotic streams of high-volume data from constellations of satellites across all orbits and turning it into rapid, actionable intelligence for warfighters on the ground.
Wow.
And the crown jewel of this acquisition, and really the reason Firefly paid over $500 million, is SciTec's $372 million contract for the Space Force's FORGE framework.
Right, FORGE. That's the multi-orbit missile warning and threat tracking system.
It's the digital brain of the nation's missile warning architecture. SciTec recently reached operational acceptance for FORGE, which is a massive milestone.
Because it marks the first time in 50 years that the U.S. government changed the prime contractor for missile warning ground systems.
Exactly. But the strategic leverage happens when you fuse SciTec software with Firefly's hardware. It creates a closed-loop capability for a $185 billion defense program known as Golden Dome.
The Golden Dome enabler. Let's walk through what a closed loop actually looks like in practice, because Firefly can use their Alpha rocket to launch surrogate targets for hypersonic testing.
Right.
They can deploy space-based interceptors using their highly maneuverable Elytra spacecraft. And then they use SciTec's ground software to process the global sensor data for automated fire control.
They aren't just participating in the mission, they own the entire chain of custody for the mission.
Which is huge.
They fill the missing link for the air and missile defense shield for the U.S. homeland. When you're dealing with hypersonic threats, fragmented vendors introduce latency, and in missile defense, latency equals failure.
Right, you can't have lag when tracking a missile.
Exactly. Firefly can now integrate the sensor data, make the automated AI-driven decision, and physically maneuver the interceptor all within their own proprietary ecosystem.
Okay, but I have to push back hard on this. Is it really that seamless? I mean, we're talking about a hardware company, people who bend metal, mix explosive propellants, deal in absolute physical tolerances, and they're absorbing a highly classified, PhD-heavy software firm where, 90% of the employees have DoD security clearances.
It's a very different vibe.
Totally different.
Yeah.
Software culture is fundamentally agile. Developers push broken code, find the bug, patch it the next day. Rocket engineers push broken code and leave a $50 million smoking crater in California.
Yeah, that's a very fair point.
You can't just slap those two vastly different corporate cultures together and expect zero friction.
No, and that is the exact friction point that keeps their executives awake at night. You can't just mandate synergy between rocket scientists and software developers.
Right.
But if we connect this to the bigger picture, you have to look at what the ultimate customer, the Pentagon, is demanding. The Department of Defense refuses to deal with fragmented vendors anymore.
They want it all under one roof.
They want fully integrated, software-defined systems. Take a look at the Missile Defense Agency's SHIELD contract, which Firefly and SciTec were just onboarded to. That contract has a $151 billion ceiling over 10 years. The Pentagon is actively routing hundreds of billions of dollars toward companies that can offer an integrated solution.
So the financial incentive to figure out the culture clash is massive.
Exactly. So while you were absolutely right that integrating those corporate cultures presents a massive execution risk, SciTec gives Firefly an essential operational advantage. Without that software capability, they simply could not compete for these top-tier defense contracts as a standalone hardware vendor.
Here's where it gets really interesting. This closed-loop dominance, this fusion of hardware and AI, isn't just restricted to Earth's orbit and missile defense.
Nope.
Firefly is taking this exact same dual-use technology all the way to the moon. Let's talk about lunar hegemony, because Firefly achieved something almost unthinkable. He successfully landed on the moon with Blue Ghost Mission 1.
And in the space economy, technical success must translate immediately into future revenue.
Right, it can't just be a science project.
Exactly. NASA didn't just congratulate them. They awarded Firefly a $177 million commercial lunar payload services contract for Blue Ghost Mission 4.
Wow.
But the detail that really proves their new business model is a smaller $10 million add-on contract they received just to purchase the additional scientific and operational data collected during that first mission.
Which is the data as a service model fully realized.
Yep. They aren't just getting paid to deliver a payload. They're getting paid for the telemetry, the surface mapping, and the environmental data they capture while they're up there.
And while Blue Ghost is establishing infrastructure on the lunar surface, their Elytra spacecraft is doing something straight out of a military thriller back in Earth's orbit.
Oh yeah, satellite dogfighting.
Satellite dogfighting.
The official aerospace term is Rendezvous Proximity Operations, or RPO. The Elytra spacecraft acts as a highly maneuverable orbital vehicle for space domain awareness.
Okay, paint a picture for us. What does that mean?
Imagine a scenario where an adversary nation moves a classified satellite into a new orbit to spy on U.S. assets. Elytra has the propulsion and the AI-driven SciTec software to alter its own orbit, approach the adversary satellite, maneuver around it, and provide real-time intelligence back to the Space Force.
It's a fascinating concept for you to think about. Whether you're a commercial mining client interested in lunar topography or a Space Force general interested in national security, this dual-use technology is what makes Firefly such a unique entity.
Right. They use the exact same underlying engineering philosophy to map a moon crater as they do to tail an adversarial satellite.
Which is incredibly ambitious. But building moonlanders and AI missile defense systems sounds wonderfully futuristic right up until the moment gravity and the corporate balance sheet catches up with you.
Yeah, the financials are always the reality check.
So what does this all mean? Let's ground this sci-fi potential in the financial realities of their 2025 review. From a top-line perspective, they had record scaling. Full-year revenue hit $159.9 million.
Which is a 163% year-over-year increase?
And the most telling metric in the entire report. That growth was heavily driven by a massive 244% surge in their spacecraft solutions segment, which pulled in $131.2 million alone.
That surge perfectly reflects the progress on the Blue Ghost lander, the Elytra vehicle, and the successful integration of SciTec software revenues. But if you are looking at the health of the company, we have to balance the revenue hype with the hard numbers of what it costs to generate that revenue.
Right.
Firefly is currently operating in a profitability vacuum. They are deeply structurally unprofitable right now.
Let's give them the numbers.
For 2025, they reported a negative $198.6 million adjusted EBITDA and a staggering negative $237.75 million in free cash flow.
So they are burning through nearly $250 million in cash in a single 12-month period.
Yeah.
How does a company survive that kind of burn rate without collapsing?
Fortress cash. In August 2025, Firefly executed their initial public offering, raising $932.5 million in net proceeds.
Oh, wow.
Because of that massive influx of capital, they ended the year with $893 million in total liquidity.
That is a massive war chest.
It is, but that war chest isn't there for them to sit on. It is specifically earmarked to fund their aggressive 2026 production ramp, the Alpha Block 2 upgrades, and the construction of the Eclipse manufacturing facilities.
Okay, so they definitely have the cash buffer. But having cash in the bank doesn't change the laws of physics.
No, it does not.
Hitting their massive 2026 targets requires flawless execution. And as anyone who follows aerospace knows, rocket science is notoriously unforgiving. Let's look at the operational execution risks facing them right now. The biggest immediate hurdle is what the industry is calling the Stairway to 7.
Right. Flight 7 for the Alpha rocket is scheduled for March 2026. This isn't just another launch. It is a highly scrutinized return-to-flight mission.
And it's meant to validate the Block 2 upgrades for the Alpha vehicle, right?
Exactly. They're introducing a consolidated in-house avionics system to reduce dependency on third-party suppliers. They are strengthening the carbon composites using that automated fiber placement loom we discussed earlier.
Right, the Space Legos loom.
Yeah, and they're implementing liner-less liquid oxygen tanks, which saves significant weight and increases payload capacity.
But we really need to explain why this is a return-to-flight mission. It all stems from a major setback in September 2025.
Right.
The Briggs explosion. During what was supposed to be a routine ground static fire test, a hydrocarbon contamination completely destroyed an Alpha booster on the test stand.
And the Briggs explosion highlights the stark reality of technical risk in vertically integrated aerospace. The failure wasn't caused by a massive design flaw in the rocket's architecture.
No.
It was caused by a microscopic hydrocarbon contamination issue within the testing facility. But in this industry, a tiny speck of grease or an invisible anomaly results in the total catastrophic loss of a multi-million-dollar vehicle.
It's brutal.
This raises an important question for their 2026 projections. How quickly can Firefly scale their production cadence, building more rockets faster, while maintaining the absolute zero-defect safety and quality control required after a major anomaly?
It's a terrifying thought for an investor because scaling up means introducing 1,000 new points of human error. And it isn't just exploding rockets that have Wall Street skeptical. There are explosive financial risks lurking in the background of this company.
Oh, absolutely.
Let's shift to market skepticism and structural risks. First up on the chopping block, customer concentration. Firefly proudly ended 2025 with a massive $1.4 billion backlog of orders. But if you look closely at the filings, a staggering 81% of that backlog is tied to just 5 customers.
Yeah, that is a foundational vulnerability for any publicly traded company. If just one of those top 5 customers pulls a contract due to a delay, or if government defense budget gets slashed in Washington.
Which happens all the time.
Exactly. The entire foundation of their revenue projection shakes. Furthermore, even with their massive IPO cash pile, the company is projecting a free cash flow burn of over $150 million in 2026 as they build out the Eclipse infrastructure.
This brings us to the dilution engine. Let's play out a very realistic scenario here. What happens if Flight 7 is delayed by 6 months? What if the Eclipse development with Northrop Grumman encounters a major engineering hurdle?
They're going to burn cash.
They will burn through that fortress cash way faster than anticipated, forcing them to raise more capital. And raising capital means issuing more shares, heavily diluting the value for current shareholders.
And that dilution risk is significantly compounded by what the market calls the PE overhang.
Right, private equity.
Before their IPO, Firefly was heavily backed by private equity. Right now, a single firm, AE Industrial Partners, controls 37.3% of the outstanding stock.
That's a huge chunk.
It is. Think of that massive stake as a giant boulder hanging by a rope over a frozen lake. No matter how well the company skates, the broader market is constantly looking up, wondering when that boulder is going to drop.
Because eventually, they have to cash out.
At some point, that private equity firm is going to want to exit their position and distribute profits to their limited partners. When they start selling off that massive block of shares, the sheer volume creates a potential market sell-off risk that could suppress the stock price for months, completely regardless of how flawlessly the rockets are flying.
Wow. So weighing the sci-fi potential of lunar data, space dogfighting, and closed-loop missile defense against the harsh reality of exploding rockets, deep cash burn, and a massive private equity overhang, we have to arrive at a final verdict for you.
To find that verdict, we have to put Firefly through the 10x multiple test. Firefly currently trades at an astronomical 24x trailing enterprise value to sales multiple.
24x, that's intense.
To give you context, legacy defense contractors who build traditional hardware often trade at a fraction of that multiple.
Wow.
Because of this premium, Wall Street analysts currently rate the stock as a speculative buy, or strictly high risk. To justify that 24x valuation, Firefly cannot afford a single misstep.
Not one.
They have provided the market with an incredibly aggressive 2026 revenue target of $420 to $450 million. Hitting that $435 million midpoint requires absolute perfection.
Meaning the Alpha rockets must return to flight without a single anomaly.
The SciTec software must rapidly expand its footprint within the Space Force.
And the Blue Ghost lander must continue delivering monetizable lunar data without a hitch.
They are entirely priced for perfection, operating in an industry where perfection is notoriously difficult, if not physically impossible, to achieve consistently.
That is the ultimate financial tension. But stepping back from the multiples and the burn rates, this company's trajectory raises a much larger, almost philosophical question for you to mull over.
Yeah, it really does.
We are watching private companies like Firefly Aerospace build fully integrated, closed-loop, AI-driven missile defense systems and proprietary lunar data networks. As they scale, are we no longer just investing in innovative aerospace companies?
Are we, in fact, witnessing and funding the privatization of our global security infrastructure?
Risk defined, portfolio
Different.
protect.